stock market. Oh, man. Woo!
Oh, baby. Ladies and gentlemen, I am late, and I really apologize. But things happen. Life gets in the way, but you still adapt and overcome. All my videos tonight will be made, but they'll be slightly later. Anyway, welcome back to Strongman Personal Finance. My name is Christopher Belli. I'm a certified CPA accountant. I'm a fake boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. Look at my green screen. It's an absolute disaster. So I got a green screen, and I got to reposition it to make it work, but right now it's a freaking wreck. Anyway, we're going to do some NIO stock analysis, and since I'm becoming a grifter, we're going to use the Everything Money Stock Analyzer tool. The Strongman Stock Analyzer tool, and we're going to use the Fufu valuation method. And at the end of the day, whatever conclusions we draw from NIO analysis, it doesn't mean you go out and buy the stock. Okay? So first, what we like to do is go look at the financial statements before we do any kind of analysis. So let's look at NIO, my PO's most recent quarterly earnings. So first of all, we can see pretty insane revenue growth that has significantly declined year over year. Maybe impacted by all the troubles in China? I don't know. But you can see the year over year revenue growth is declining, and it's declining pretty significantly. Now, if we go look at the profit margins, their gross margin has hovered around 16, 17, 18%, okay? Roughly in that area. So right off the bat, that tells me that this is not a Tesla. Now, there could be many reasons the gross margin is low. Maybe they have a lot of factories that are not at max capacity. And what happens is you have to allocate a lot of fixed overhead to fewer cars. Maybe that's why their gross margin is low. But just looking at it, it ain't that impressive. This ain't a Tesla. This is more of a normal car company, at least for now. Their operating margin, negative 21%. So if you go back through all their quarterly earnings, they have been unprofitable. They have never achieved a profit. So when you throw something like this into a stock analyzer tool, honestly, I would almost prefer the Fufu method over the Everything Money method, because a company like this, if you put this into a DCF, which we'll do it, and I'll explain to you why it's stupid, it doesn't make any sense, okay? And of course, they have a negative profit margin. Now, we can see that they are issuing shares every single quarter. That reduces your ownership in the company. Look at the change in shares. 1.1, 1.5, 1.56, 1.6, going up and up and up. So you're losing money, you're unprofitable, probably burning cash flow, and they're issuing shares. Let's go look at the balance sheet. So the balance sheet shows us that they have total current assets of 64 in cash or cash equivalents, okay, and short-term investments. They have a little bit of receivables, really not much inventory. They keep that pretty low, and other current assets. That's not bad right off the bat, because you can't always necessarily look at the current assets and say, oh, well, they have a lot of current assets. Well, if a lot of your current assets are in inventory or prepaids, and you have a hard time selling that inventory, and your prepaids are for a couple of years, I don't know. You may have issues there, okay? So they have a lot of cash and short-term investments. Let's go compare that to the current liabilities. They have 34, billion Chinese currency units of current liabilities. So you look at their balance sheet position, at least for the next year, they're probably not going to go out of business. They're at least that solid with their current assets. Let's look at their total long-term assets. So they have 29 billion Chinese currency units of long-term assets. Property, plant, and equipment is the lion's share. Remember, this is a car company. And look at the growth. They really bought a lot of property, plant, and equipment. It almost increased by 60% in a quarter. That's pretty nuts. But they're massively expanding their property, plant, and equipment. they have some long-term investments. I'm not sure if those are like, them investing in other companies or what. A little bit of goodwill and intangibles, nothing crazy. And it went up, so they maybe acquired another company or two. And other long-term assets. Their total long-term assets are 29. Let's go compare that to their long-term liabilities. So most of these assets, well, all of them are secured by long-term debt. And I like to compare long-term liabilities to long-term assets because if you think about it, if you buy a building, a truck, factory, whatever, generally you're going to either pay that with cash or you're going to finance it with debt. And the last thing you want to see is a company that has, not many long-term assets, but they have a lot of long-term debt. That kind of tells me they're potentially financing their business from taking debt. I mean, think about it. Like you get a mortgage, right? And you use that mortgage to buy a long-term asset, a house, and that it roughly balances out on the balance sheet. But if you have a ton of long-term debt and most of your long-term assets are like, I don't know, goodwill, it's a little concerning. So overall, their property, plant, equipment, looks like a lot of their long-term debt is going into that and whatever these other long-term assets are. So not the worst in the world, but their PP&E is less than their long-term debt. So theoretically, if they're kind of underwater on those long-term assets, but it's not like the worst I've ever seen. And we can see they're packing on debt. Okay. Let's see. Common stock, well, it's all over the place, but we know what's going up. And their shareholders' equity. So their equity has been going up. So they've been generating, book value at least. Where that's coming from remains to be seen. Okay. So let's go ahead and look at the statement of cash flows. Now, an important thing is, wow, this is really missing a lot of data. This tells me nothing. Honestly, I wouldn't even waste my time with this. There's nothing in here. Holy freaking crap. This is bad. I wonder if it gives me like the annual. Let's see. Here we go. So they have positive operating cash flow, but at least in 2021, they did not have free cash flow. But I wouldn't even trust these numbers. There's something wrong here. But yeah, honestly, we'll just skip this entirely because if you want to invest in this company, you want to look at their financial statements because this website isn't giving you crap. And of course, they don't have a PE ratio because they're unprofitable. Price to sales has collapsed because the stock has collapsed. Price to books has gone down because the stock has collapsed. So overall, not the worst balance sheet in the world. They're not going to go out of business within the next year, in my humble opinion. I can't really tell you anything about the cash flow because this tool sucks, but they have slowing pretty drastically year-over-year revenue growth, and they have been unprofitable since their inception, and they are issuing shares. So as an investment right off the bat, this is not my kind of stock, okay? Oh, it's the future. No, thanks. I wonder if there's like here's what the analysts have to say. You always want to look at what the analysts have to say. So right now the stock's at $11. And some clowns have it at a high of 70 within a year, average of 32 and a low of 24. Remember, an additional risk of this company is that it's a Chinese company. And we know what's happened to Chinese stocks recently. So, most of the analysts are saying, buy. But I really don't care about analysts. Now, here's the crazy thing right here, okay? Analysts are seeing an explosion in revenue growth. Look at this. 59%, 83%, 37, 59, 60%. That's pretty freaking nuts. And they expect the company to become profitable in 2014. So at least 2 freaking years before this company actually makes money. But you look at the revenue growth, at least recently. It's really slowing down year over year. That's a little concerning, okay? So let's go ahead and drop this into a DCF because why not? Now, here's why this is stupid. This company is not profitable. And what this does is it calculates it discounts all the future cash flows back to the present. So if you see everything money throwing NIO into a DCF, it's stupid, okay? It's absolutely freaking stupid. So this is a Chinese currency units. Oh, this is a freaking pain. Let's see. Trailing 12-month revenue. Okay, well, we're going to try this. It may be a disaster because now I'm dealing with a freaking currency conversion. All right, shares outstanding. Let's see. How many shares outstanding do they have? I just want to make sure. NIO shares outstanding. 1.67 billion. Let's see. 167. Boop, 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 boop. Okay. So, and don't freak out. These buy points right back down here are in US dollars. Okay. This is not, we have to convert that to Chinese currency. And that's another risk for Chinese currency. Okay. So let's go ahead and do some revenue growth. And this is stupid because it's not profitable, but we're going to be putting profit margins in here. That's the fatal flaw of their tool. 15%, 20%, 25%. Net income. Well, let's go look at Ford, see what their gross margin is. A little bit lower than NIO's. Let's go look at Toyota. Oh, let's see. Okay, Toyota's gross margin's a little bit closer. So we can almost say their profit margin, if everything worked out and NIO's gross profit doesn't improve, they might have a profit margin of between, 8 and 10. So we'll do 7, 8, and 9. Free cash flow margin, I'm just going to ignore that in this problem because I don't even want to guess when they're going to have free cash flow. Now, PE, what's the PE going to be? I have no freaking idea what NIO's PE is going to be. Absolutely no idea. And it's actually a huge part of the DCF. So I'm just going to throw in some random numbers because why not? Let's do 14, 16, and 18. I don't freaking know. Okay. And then we're not going to worry about free cash flow. And we want a 10% rate of return because why not? So what are my buy points here? 38, 59, and 89. And these are in Chinese currency. So let's do 89. Let's do the high buy point. 89 CNY to USD. $12. There you go, ladies and gentlemen. So apparently with the high assumptions, NIO is a buy at $12. Once again, here's the flaw. Look at the assumptions. This DCF, let's go look at the high point, has their revenue going to 121 billion Chinese currency units, which if you go back, let's see. That seems more reasonable to me. Okay, so in 5 years, so their current revenue is 36, billion Chinese currency units. This is saying in 5 years they're going to have $121 billion of Chinese currency units in revenue. That doesn't seem crazy to me. Okay, but if you see, it's discounting profits. Then they become profitable in 2024, maybe a slight positive number here, and then a slight positive number there, and blah, 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 blah. Okay, so that's fatally flawed. So that's kind of my analysis. Now let's do the Fufu method. Okay, now the Fufu method, at least to my understanding, is that you just predict what a company's bottom line margin or profit is going to be in the next 5 years, and then you assign a multiple to that. And that's the market cap of the company. So their current revenue, my revenue, and this is all in Chinese currency, once again, is that their revenue growth rate, let's be nice and say 25%. Oh, wow, just like my DCF, bro. And their profit margin is going to be, what do we say it was going to be? 25, 9% profit margin. So we do Fufu method, 9% profit margin, and their PE will be, 18. So their future market cap is, ignore the yellow, would be 197, billion Chinese currency units. So you go back and you look, what is their market cap? Okay, now my question is that in Chinese currency units? I don't know. What is NIO market cap? Is that in USD? Okay, so their market cap's 18 billion USD. So this is in Chinese currency units. So let's go ahead and figure out what this CNY to USD. Let's see. Would be $27 billion. So according to the little Fufu method, we would go from 18 billion, right, to 27. So like less than a 2x. Now, which one sounds more reasonable to you? The Fufu method or the DCF method? I don't freaking know. But at the end of the day, that's what you get. So overall, NIO's a clown stock. You should not make any investment decisions. But I wanted to show you the absolute clownery that goes into the stock analyzer tool and the absolute clownery of the Fufu method. They're both trash, okay? You should just buy an index fund. Let's see. NIO, my glory hole. What time it's... I know I was late. I'm sorry. Scott Schaefer bashed Weakman. Oh, no. Did he forget? No, I'm here. What do you guys think about my green screen? Let me take this down. Hold on. Oh. Oh. You guys like that? Oh boy. Best way to buy, just buy it, bro. It's going to go up. There's a lot. I mean, it's not only is it unprofitable, but you also have all the China geopolitical risk. Like there's just so much bad about that. At least with Baba, you have like profits and free cash flow. I mean, it's whatever. You got to add Jeremy's garage to that green screen or Target frozen. Yeah, well, I got some ideas. I just have to fix this because right now it doesn't work. So I'm glad you're covering NIO. I was considering investing, and Jeremy's only covering Snap today. Yeah, didn't Snapchat collapse? I never liked Snapchat. They had compared to Pinterest, they had really low gross margins, relatively. I was like, I don't know. If I had to choose one, I'd probably go with Pinterest, but that's just a very basic assessment. Ready to join, explain why they are the next Apple, bro. I was waiting for you to do a video on NIO. These grifters were telling people to buy this stock. I mean, there's just no way to value it. You can't. I mean, you can do all sorts of financial voodoo. You can be like, well, I think their revenue is going to be this, and I think their price to sales is going to be this, and maybe you can get some kind of future market cap, but it's just all guesswork and garbage, okay? Negative profit doesn't matter when debt is cheap and has low interest rates. Ruh-roh! NIO will hit 120 next month, guaranteed. NIO has a lot of headwinds coming. Going to be in a penny stock territory soon. Yeah, it's not something I'm investing in. I got the cough. I got AIDS. Thank you, Andrew. This 199 about 100x on NIO. That's what I'm going to throw that money straight into NIO. Great analysis. Yeah, I just plug some numbers in the stock analyzer till people think I'm a genius. Do you think by the time the recession is over and the market is ready to bounce back, that EV competition will be an issue? There's always going to be EV competition. It's coming like a tidal wave. You don't think the other companies want those profit margins? Woo! Yeah, it's annoying. It's been like persistent. Why is Aramco not in VT? Second biggest market cap. I don't know. Why are you using your precious tool for clown stocks? Why not do it instead on BYD? It's the only legitimate competitor to Tesla in China. Even Buffett has a position. Well, I'd rather bet on BYD than Tesla then. Oh my God, Crystal, there's Fufu checking you out in the garage. Hide your wife. It's in USD. Yeah, it's the tool's so weird because that stock analyzers, they had all the revenue in Chinese currency units, and then they had market cap in dollars, which is really odd. I keep asking you, please do a Jeremy account review. He's down massively. I mean, like, what more do you want me to say? I mean, he's probably down like 60% in most of his stocks or more. NIO also has listing there, grifting on the Singapore exchange. I appreciate the effort on Jeremy and try to cheer me up. I watched both of you and you're equally as good. Equally as good? Come on, man. Don't have a favorite. Oh, please. But he has those finance cards and you have that boiler backdrop. That's true. Jeremy on the surface, well, he is richer than me. I'll give him that. On the surface, he's just more successful. He's better than me. He's won the game of life. I bought this stock because of Stink Blow. Hey, everybody. Stockmo here. Stink Most had a $100 target last year, and here we are near 10. I did, but it's not working too well. All right, we're going to move on to the next video. I got to get these done, and then Strongman's going to bed. Cheers.